Hello and good evening everyone and welcome to this live session of GST. कैसे हैं आप सब लोग? Can you hear me? Can you see me? Please confirm in the chat box. Yes, good evening Firoz, good evening Zanab, Prachi, Rawat, Ujjal, Kirti, Sai Luthra, Kirti Batra, Manoj Panda, Chirag. Good evening everyone. Am I audible and visible to all of you? Please confirm in the chat box. फिर हम शुरू करेंगे आज का live session of GST that is going to make you a winner in the upcoming examination. Yes, sir. DD, hello sir. What is DD? Yes, how's you? I'm very good. Yes, guys. So yes, in the last sessions we had studied very important chapters of GST, and yes, we are doing a quick marathon of GST relevant for both intermediate and final students. So yes, if you see this marathon just before your examination, all your concepts will be clarified in a very small span of time. And guys, whenever you are traveling from one place to another place, always carry your earphones with you. Whenever you get an opportunity, just listen to this marathon, download it on your phone, listen to it during your travel time, and you will be immensely benefited out of this marathon lecture of IDT. I'll be covering all the important chapters of IDT. Yes, sir. Oh yes, test schedule is to be sent by me. Yes, guys, I will send you the test schedule by today itself. I'll send it to you. Yes, I forgot to send the test schedule. By the way, for your information, tests are scheduled. Test of IDT, DT, audit for intermediate students, and for final cost audit and BVM SPM are scheduled every Saturday and Sunday. Please join the WhatsApp group for taking test. It's absolutely free, of course, for the entire CMA student community. Yes, sir. All right, guys. So let's start today's session, and today's session is dedicated to the concept of value of supply. The concept of value of supply. Now, sir, where does this concept of value of supply emanate from? So, guys, we have studied in our earlier lectures that the charging section of GST is section 9. Section 9 will tell us under what circumstances will the GST be levied. So, section 9 is the charging section. And yes, section 9 of the GST Act will tell us what kind of transactions or events will trigger the levy of GST. We have studied three things in this particular concept, guys. Number one, GST is levied on supply. So whenever there's a supply of goods or services, GST will be levied on it. Section 7 and 8 we have already covered in our earlier lectures. So today we are going to cover at what value will the GST be levied, because GST as a rate will be levied on some value. What will be that value according to which GST is levied? Today's entire session is dedicated on what is the value of supply. What is the value at which rate of GST will be applicable and GST will be applied. Section 15 is the main section which deals with value of supply. Of course, connected with certain rules. We'll be studying a lot of rules today. So accumulated, read together, the provisions of section 15 along with the rules are the agenda for today's class. Are we all set? How's the Josh, guys? Let's give it in the comment box. Please let me know how's the Josh. All of you guys, how's the Josh? Oh yes, rules are also enumerated. Rule number 27, 28, 29, 30 and 31. Perfect. Perfect chronology. Yes. Hi everyone. Yes, hi. Great. So guys, let's start. Section 15, value of supply. What will be the value of supply? Let's start section 15. Section 15, value of supply. How will we value our supply? What will be the amount on which DT will be, GST will be levied? It will be levied on the value. What will that value be? How will that value be computed? We are going to start that now. All right, let's start value of supply. Oh, finally, Mr. Pediwal is here. Very high, sir. Good. Never low, like your income. Jarab says, never low, like your income. Hi, super se upar. Rajveer Agrawal says super se upar. Brilliant. Okay, let's start one of the most important topics of your syllabus. Yes, from an examination standpoint, it's very, very important, guys. Practical and theoretical, both questions will come from this particular chapter, which is value of supply. And it's my earnest request to each one of you, please, simultaneously, while solving your book or the module or the coaching institute study mat, whatever you are solving, please solve the scanner as well. Scanner will give you a hint of the questions which are coming in the past examination. So let's start value of supply, which is section 15. The value on which GST will be levied is value of supply. We will bifurcate our entire discussion into two parts. Number one, when the supply is made to an unrelated party means there's no connection, there's no relationship between the people who are entering into the transaction. So point number one, when the supply is to an unrelated party, and discussion number two, when the supply is made to a related party. Now, sir, why are we dealing with related party in such a specific significance? What is the significance of dealing with related party, and why is treated differently? Why do we compute a different value when we are dealing with the supplies with our related party? Why do we compute it differently? Guys, the simple reason is that related party, in case of related party, there's a chance that you can manipulate the value to save your taxes, because related party is your known party. Therefore, there's a possibility that you can manipulate the value. Therefore, government is extra cautious when it comes to related party. If it is unrelated party, which means it's a third party, independent party, then of course the chances of manipulation of value is super low, because no one would want to miss out on their revenues. So the rules are different for unrelated party transactions, rules are different for related party transactions. So first we are going to deal with the unrelated party transactions. Value of supply in case of supply to unrelated party. Whenever there's a supply to unrelated party, what will be the value of supply? That is what we are going to discuss now. All right, sir. So supply which is done to an unrelated party, again it is divided into two parts. Number one, when money is the sole consideration for the supply. Number two, when money is not the sole consideration for the supply. So what do you mean by that? So as the meaning is that suppose I am supplying any component, I'm supplying ACs. Okay, I'm an AC dealer. So I give you the AC as a supplier, I give you the AC, and in return I charge you money. That is the case where money is the sole consideration for the supply. On the other hand, I give you an AC, and in return I charge some money from you plus your old AC. I also take your old AC, or I take your refrigerator, or I take anything else apart from money from you in kind. Okay, that is the case where money is not the sole consideration. So we have bifurcated our value determination into two parts. Number one, when money is the sole consideration. Number two, when money is not the sole consideration. Value may be determined separately in these two cases. Now, guys, where money is the sole consideration and the transaction is with the unrelated party, then guys, the value at which GST is to be payable is the transaction value, or the actual value on which the dealing has happened. Simple as that. Okay, because it is unrelated party, so there is no doubt that there won't be any hanky panky stuff, there won't be any misleading information that you are supplying, or there is no reduction in value or increase in value. You would not do that. So in that case, where unrelated party is concerned and when money is the sole consideration, you are not giving anything else. In that case, guys, transaction value is the value at which the GST should be levied. Value of supply is the transaction value. Transaction value means actual value at which transaction between two parties have taken place. That is the transaction value, which again will be determined by the provisions of section 15. Now, what if money is not the sole consideration? Guys, if money is not the sole consideration and along with money, you are getting something else also in return. For example, an old AC you have exchanged for a new AC, and you have given some incremental amount, some differential amount to the AC vendor. In that case, money is not the sole consideration. Along with money, you are also giving old AC or old refrigerator or anything else which is old to the shopkeeper. In that case, your value should be determined according to rule 27, 30 and 31, which we are going to discuss in detail in today's class. So first, let us take this eventuality where money is the sole consideration and the transaction is done with a unrelated party. As when a transaction is done with an unrelated party and only money is the sole consideration, in that case, the transaction value is the value at which GST is payable. The value of supply is the transaction value. value of supply is the transaction value. In that case, it means the value at which the transaction has actually happened. Actually, the transaction has taken place. That is the value of supply. In case the transaction is with an unrelated party, if the parties are unrelated, parties are not connected with each other, then the transaction value will be the value at which GST will be levied. So you have mentioned about this transaction value so many times. So what is this transaction value? What is this transaction value? That is the question under consideration. They cannot manipulate the rates, but they can manipulate the value of supply. Like you exchange phone online. Yes, like we exchange phone online. Yes. We have 4 options for unrelated party for case of determining value. All right. So in case of unrelated party, guys, transaction value is the alternative. What do you mean by transaction value? Transaction value means price actually paid or payable for that particular good. Whatever good you are buying, whatever good you are purchasing, the actual price that you pay to the shopkeeper for that good will be the value at which GST is leviable. 2 conditions should be cumulatively satisfied. Number 1, transaction should be between unrelated parties. Number 2, money should be the sole consideration. If money is the sole consideration, transaction between 2 unrelated party, nothing doing. Whatever is paid or payable for that particular supply, that will be the value of supply. Simple as that. So price actually paid or payable shall be the value of supply. Now, sir, the price may be different from MRP, maximum retail price, yet it can be different from MRP. So you please ignore the MRP. You please ignore the cost at which the goods are made. You please ignore the any other price which is there. You just have to see the actual payment made, the price which is actually paid for that particular product to the shopkeeper, to the vendor. That price will be the price at which GST is leviable. That will be the value of supply in case of 2 situations being satisfied. Number 1, money is the sole consideration. Number 2, transaction is made to the unrelated parties. So that is the guiding principle. That is the basic principle. 15.1. Whatever money you pay for buying that good, that will be the value of supply. That is the first principle. That is the first principle. Now we have 2 more things, guys. There are certain inclusions and there are certain exclusions from the transaction value. Some expenses or some things needs to be added in the transaction value. Some things need to be reduced from the transaction value to compute the value of supply. So let's start section 15.2, which is inclusions to the transaction value. What things are to be included in transaction value? All right. What things are to be included in transaction value? Section 15.2. First, 2A. First clause. Guys, first clause is we include all the taxes which have been levied, any kind of cess, any kind of fees that has been levied in the invoice. We add all those taxes or all those over and above the value things which are there in the invoice. We include all of them in the value of supply, except for 2 taxes. Number 1, GST. GST is to be excluded. Number 2, tax collected at source, which is as per the Income Tax Act. Both of these things should be excluded while computing the value. Otherwise, all the other taxes which are levied on the invoice, which are there on the invoice, they are to be added while computing the invoice value. That is the first principle that we need to understand. All the taxes, any kind of cess, okay, duties or any kind of other taxes other than GST and TCS should be added while computing the value. That is the very first principle. Second is 2B. In 2B, we say that when supplier is liable to pay to third parties on behalf of the recipient. If supplier of the goods is responsible for paying something to a third party, and unfortunately supplier did not pay it, recipient paid it, then the value should be inflated by that particular amount. I'll give you a simple example. It was duty of the supplier to deliver the goods at the recipient's place, but supplier was obviously obliged to do this, but the supplier did not do it, and the recipient had to do it. Recipient had to spend money in supplying the goods from supplier's place to recipient's place, and recipient requested the supplier to please reduce the invoice value by that amount, because that amount which you used to pay, you had to pay, I am paying it as of now. In that case, guys, value of supply will be inflated by the amount of the freight cost which has been paid by the recipient But according to the agreement, according to the invoice, the liability to pay this freight cost was with the supplier. This shall be added while computing the value of supply and while computing the GST which is payable on that value. So this is the second inclusion in the value of supply. Third inclusion, any incidental expenses which the supplier needs to incur before delivery is done. Any incidental expenses which the supplier needs to incur before the delivery is done. So all kinds of incidental expenses are required to be added while computing the value of supply. That is the third inclusion in the definition of value of supply. Then interest, fee, penalty for delayed payment. If there's any interest, fee, penalty for delayed payment, that entire amount must be added to value of supply. But please note, interest on deposit, loan or advances is not to be added in value of supply because it is exempt from taxation. So interest can be of two types, okay? Interest, fee or penalty for late payment of invoice, okay? You have paid the invoice late, you have made delay in payment of the invoice, therefore you are being charged extra interest. That will be added in the invoice value, that will be added in the value of supply while calculating the GST. But if it is a case of normal interest on loan, interest on deposit, or interest of on any advance that you have given, in that case it is not excigible to GST. It is an exempt service, so GST will not be liable on that particular amount. So interest fee payment on delayed payment will be added to supply. Subsidy, if you are getting any subsidy. What is subsidy? Subsidy is when government of India shares a price, a portion of the price with the intended users. For example, guys, gas subsidy, LPG, we use LPG at our home. In case of LPG which we use at our home, guys, major chunk of that LPG cost is borne by the government of India. Government of India bears a significant part of the LPG. So if LPG is costing say 3,000 rupees per cylinder, 1,500 is being borne by government of India, 1,500 is borne by you. So subsidy is granted by government of India to the suppliers so that customers are benefited and customers do not require to pay the entire amount by themselves. In this particular case, guys, whether that subsidy amount should be added while computing the value of supply, because actually the worth of the cylinder is 3,000 rupees. It is just that because government is supplying subsidy to it, therefore the amount is getting reduced. But does that mean that GST should not be paid on that amount? That is the question under consideration. So subsidy, if it is paid by government of India, then it is not added in the value. No GST applicable on the subsidy which is provided by government of India. If the subsidy is provided by any other organization except for government of India, then guys, we will see one thing. If the subsidy is linked to the price, if the subsidy is linked to the price, then it is added in the value. But if subsidy is not linked to the price, then it is not added in the value. Now, please allow me to explain you the difference between linked to price and not linked to price. There are two kinds of subsidies which are given by any organization or any charitable institution. What are those two kinds of subsidies? Number one, subsidy linked to price, which means that the external organization is committing that if a good is being sold at rupees 20, 5 rupees will be borne by them, 15 rupees will be recovered from the customer. This is a subsidy which is linked to the price. And what do you mean by subsidy which is not linked to the price? It means a subsidy which is not granted over price. It is granted over, say, raw material which is used in manufacture of that particular product. The raw material which is used in manufacture of that particular product, or capital goods which are used in manufacturing of that particular product, on that, guys, subsidy is provided. In that case, when the subsidy is provided on raw material or capital goods, guys, it is not linked to price of the good. When it is not linked to price of the good, then it is not added in value. Value is not inflated by that amount. But if it is linked to price of the good, then the value is increased by the amount of subsidy which has been granted. So I'll give you an example. A product is costing you 20 rupees. If a product is costing you 20 rupees and 5 rupees has been agreed to be borne by a charitable institution or any other organization, then 15 rupees customer has to pay. Invoice will say 15 rupees, but the GST will be levied on 20 rupees because 5 rupees has been paid by that organization to the supplier. Invoice is of 15 rupees, I agree. invoice is of 15 rupees, but the GST which will be charged, it will not be on 15 rupees, it will be on 20 rupees. The subsidy which is linked to the price shall be added to the value of supply while calculating GST. So therefore it is added. So this is how subsidy is included by government. If it is provided by government, central government or state government, then guys, it shall not be added in the value. But if it is provided by any other organization, for example, a private organization gives you subsidy, then guys, it is added if it is linked to price. It is not added if it is linked to anything else apart from price, for example, raw material or capital goods or anything else. That is the benchmark. That is the principle which is to be followed. So section 15(2)(a) to 15(2)(e) includes all the inclusions which are there in case of value of supply. Very, very, very important. Next topic is, what are the exclusions from value of supply? What are the things that are we going to delete or subtract while calculating the value of supply? There's only one thing which we are going to reduce from the value of supply. It is the discount. Whatever discount is there, whatever reduction in price is there due to discount, that particular amount will be reduced while calculating the value of supply. Now, discount also has got some typical transactions, some typical things which we are going to discuss in our next slide now. Okay, you are aware what is discount? Yes, sir. Discount means reduction in price that is granted to the recipient for fulfilling any condition. Yes, guys, that is discount. So discount is the reduction in value which is offered to the recipient of services by the supplier of service. That is known as a discount. Okay. All right. So let's start section 15(3), which is discount. What is the amount which is reduced from our overall value, from our overall price? It is discount. So while computing the GST, we will reduce discount subject to the conditions which are given over here. Section 15, subsection 3. So section 15(2) deals with the additions. Section 15(3) deals with the discount. Needless to say, for intermediate students, it's not very important to learn the sections, but it will be an added advantage if you learn the sections and you write your sections in the answers, then the examiner will be super happy. He will be super happy with all of you. Okay. So my recommendation, at least the major sections you should remember. Section 7, 8, 15. These are the major sections which you should remember. 9. Okay. So 15(3), exclusions from the value of supply. Discount is always reduced while computing the value of supply. These are the exclusions from value of supply. What are these discounts? So discounts may be of two types. Discount which has been determined at or before supply, or discount which has been determined after supply. Okay. So when supply happens, if your discount was agreed with the supplier, the recipient and supplier have agreed the discount before the supply has happened, at the time of supply or before the supply has happened, the discount was agreed at that point in time, then guys, what is the rule? Rule is, if it is recorded in the invoice, if the discount is apparently mentioned in the invoice, then it is allowed as a reduction. If it is not recorded in the invoice, then it is not allowed as a reduction. So suppose you have already before the supply is made, as per the agreement, you have already agreed with your supplier about the discounts. Before the supply, you have agreed about the discounts with your supplier. Suppose you have already agreed. Okay. In that case, guys, if you have recorded the discounts on the invoice, if the invoice mentions the amount of discount, then you can allow it as a reduction. If the invoice doesn't mention about the discount, and discount is separately charged or separately given to you, then you will not be allowed to reduce the discount from your value of supply. Okay. So that is the simple fundamental which we do in case of discounts which are already agreed before supply. Already agreed before supply, already given before supply. Sometimes what happens is you give discount after the supply. For example, the condition is that if you sell 1 lakh units in an entire year, then a discount of 5,000 rupees will be given to you per piece which is sold. So guys, after 1 lakh, the discount will be given from a retrospective effect. Okay. And this was not agreed in the agreement. It is on the performance of the supplier. If the supplier performs well and he sells a lot of goods, then the manufacturer will give him a discount. Okay. This was not agreed before the supply was made. This was a condition which was there after the supply was made. This was not agreed before the supply was made. This discount was given after the supply was made. This discount was given to the to the supplier or to the recipient. In that case, what will happen? If the discount is agreed before or at the time of supply. So there was a clear understanding between the supplier and the recipient that, once you reach 1 lakh units sold, at that point in time, we'll give you a discount from a retrospective effect, which means from day one or unit one, we will give you a discount. Guys, in that case, the discount was agreed before or at the time of supply. In this case, you have to fulfill two conditions. Number one, the discount should be linked to each and every invoice. Every discount should be linked to each and every invoice, that yes, this discount relates to that invoice. So if discount is linked to each and every invoice, and secondly, ITC which has been already taken in the past has been reversed. If both these conditions are satisfied, then the discount is allowed as a deduction. So very, very important. If the discount was agreed before the supply was made, which means that, the agreement has specified that discount will be given to you. In that case, please fulfill two conditions: that link your future discounts to previous invoices. You have already raised previous invoices of first, second, third unit which is sold. You just link your discount with the previous invoices, and you should be able to demonstrate to the tax authorities that yes, look, this discount which I'm giving now pertains to invoice number 110, which I had issued 3 months before. If you are able to link discount to individual invoice, and you are able to reverse the ITC which was taken earlier, then guys, we are going to allow the discount as a deduction. But if you are not able to do any one of the situations, any one of the conditions, you are not able to fulfill any one of them, then we will not allow the discount as a deduction. So this is a clear section, that only if discount is linked to the invoice and ITC is reversed, only then discount will be allowed. Otherwise, discount will not be allowed. Now, so what will happen if the discount was not agreed at the time of supply? So when the supply was happening, then there was no agreement between the supplier and the recipient. But subsequently, when the sales boosted up and when the sales were amazing, then guys, in that case, the discount was given, and discount was given from a retrospective effect from past supplies. Okay, guys, in that case, it is not allowed as a deduction. This is a case of secondary discount. It is not allowed as a deduction, because to allow discount as a deduction from value of supply, you should have something with respect to discount written in the agreement. Agreement should mention something about the discount, that is for sure. If it is not mentioned, then we will not allow a discount as a deduction, because at the time when the supply was made, at that time there was no indication of discount. So net our value of supply will not fluctuate because of this discount, because at that time discount was not there. Yes, sir. If one of the conditions isn't fulfilled, then deduction is not allowed. Credit करा, electronic ledger में use debit कर देंगे. Perfect. ITC को perfect. सेक्शन तो आपने याद करा दिए हैं. वेरी गुड जनाब. सेक्शन अगर याद हो गए तो मजा आ गया, मजा. वेरी गुड. फिर देखना क्या जबरदस्त मार्क्स आएंगे आपके एग्जाम में अगर सेक्शन हमने कर लिए हैं याद. Yes. All right. So now let's come on to the rules which are applicable for determination of value of supply. The rules which are applicable for determination of value of supply. Certain rules which are applicable. Let's study those rules. So yes, guys, please in the chat box, I want a responsive audience. In the chat box, how's the Josh, guys? And yes, do hit the like button which is there. Right there. Hit button is right there. Just like that hit button. Just hit that like button so that I'll get the energy. Yes, sir. हिमानी चौहान से सर डिस्काउंट लिंक टू इनवॉइस दोबारा बता दो. अच्छा, मैं दोबारा बता दूं भाई. डिस्काउंट लिंक टू इनवॉइस. ओके, सो डिस्काउंट लिंक टू इनवॉइस मींस so I have already sold 99,000 products, 99,999 products of a particular company, and I am now in the process of selling that last one product that will make me eligible for a huge discount. Okay, now when the vendor gives me a huge discount and he says that, oh, you have sold 1 lakh units of this particular for our company, very, very good, we are going to give you a discount, which means that, till now you are buying the good for say 20 rupees from us and selling it at 25 rupees. We will give you additional 2 rupees discount from a retrospective effect, which means from unit 1 we are going to sell our good to you at 18 rupees. So you will sell it at 25, you will have additional profit margin, and that is the discount which we'll offer you from a retrospective vest, from which means from day one. Now guys, discount which is given today, let me repeat, discount which is given today, it should be linked to the invoice which has been raised earlier, which means you should be able to one-on-one map that what was the discount which was given right now, to which invoice is it linked to. Suppose if the vendor gives you a lump sum discount means, oh wow, your sales are 1 lakh, amazing sales, I will give you 50,000 rupees as discount. That is a lump sum discount which is given to you. And in case of lump sum discount, there's no one-to-one correlation between the invoices. Since there's no one-to-one correlation between the invoices, deduction shall not be allowed. This is known as one-to-one correlation with the original invoice. The earlier product which has been sold, that product should be linked with the discount which is given now. That linking should be there. If there's an ad hoc discount, which means randomly we have given you discount of say 80,000 rupees, 70,000 rupees, in that case, guys, there's no one-to-one linking, and therefore deduction will not be made in the value of supply for this discount. That is the meaning of this word. Meaning of the word linked to invoice. Yes, guys. Josh is super high. All of us are in the best of our abilities. And yes, we need to conquer CMA Intermediate, GST and DT in an amazing way. And yes, we need to conquer CMA Final GST in an amazing way and score super duper marks in our examination. Yes, sir. Absolutely. We are absolutely ready, sir. Let's start rule number 27, which is consideration not only in money. When the consideration is not only in money, now guys, we have finished the portion where the consideration was only in money. Now we have dual consideration, one in money and second in some other thing like in kind or some other thing is being given to us. So the consideration is not only in money. Rule number 27 is what we are going to start now. Now guys, when the consideration is not only in money and we are getting something else also in return, for example, I am buying a new AC and I'm giving my old AC to the shopkeeper and I'm also giving some money. So money is not the sole consideration. Okay, in that case, I have two valuations to make. Number one, the money which has been given. Number two, the old AC which has been given. So the consideration is in two forms. Number one, the money which has been given. Number two, the old AC which has been given. Now the question is, how should value of supply be determined for computing the GST? Let's see what is the value of supply. Option number one is, guys, please find the open market value of the goods supplied. Whatever goods are being supplied, for example, the new AC in my case. Guys, in case of new AC, you should calculate the open market value of that new AC. That AC is being sold in market. That same AC is being sold in market. Of course, same brand, same make, same power, everything should be the same. Same market is being sold, same AC is being sold in the open market. You take that value of that particular AC. You ignore the money which has been exchanged, you ignore the old AC which has been exchanged, and you take a value of the same goods which are being supplied in market. So open market value of goods supplied between two unrelated parties, then where only money was the consideration and supplied at the same time. Three things should be mandatorily followed while calculating the comparable price. Three things should be mandatorily followed. ऐसे जबरदस्त टीचर एंड कंटेंट के लिए सिर्फ एक लाइक जस्टिफाइबल नहीं है बिल्कुल भी. वाह, व्हाट अ कमेंट बाय मिस्टर पेड़ीवाल. घर पर जितने भी मोबाइल हैं उठा से करो. ओहो, मार्केटिंग एंड एडवर्टाइजमेंट. वाह. तो भाई मैं अब मिस्टर पेड़ीवाल को अपना मार्केटिंग मैनेजर अपॉइंट करता हूं. मार्केटिंग एंड एडवर्टाइजमेंट manager of our classes shall be Mr. Pediwal. So after Mr. Pediwal qualifies CMA Inter, he will come in our office and be the marketing manager of our organization. क्योंकि दोस्तों हमारी बहुत सारी कॉम्पिटिटर्स हैं MBVA करके जो भी यहाँ चैट बॉक्स में हैं, वो लोग क्योंकि आएंगे तो उनसे हमें compete भी करना है, तो हमें बहुत स्ट्रॉन्ग मार्केटिंग मैनेजर्स चाहिए ही चाहिए. Yes. Fair market value. Yes, this is the fair market value. So fair market value of the good is option number one. First option that is to be chosen is fair market value of the goods supplied. The fair market value of the goods supplied, that should be the first option that should be chosen by us. the same good is being sold somewhere else in the same market. You must be selling the same good to someone else. So, you take the fair market value of that particular good. Remember three things. Three things are very, very important. Supply should be to an unrelated party. The comparable price which you're taking, that should be supplied between unrelated parties. Only money should be the consideration. There should be no other consideration. And around the same time, the supply has to be made. Supply has to be made around the same time. There should not be a lag between your supply and the supply which you're taking as comparable. Both should be absolutely different. Okay. So option number 2, suppose if you do not have any comparable sales. Suppose if you don't have any comparable sales. Guys, if you don't have any comparable sales, then in that case, second option should be applied. What is the second option? Second option is value of the goods obtained. You compute the value of the goods obtained, which is the old AC in my case. You compute the fair market value of that old AC, and you will add money which is being granted to you. So both the things should be added, value of goods obtained and money which is being given to you. If you add both the things, then you will get the value of the new AC which is being supplied to you. This is option number 2. Of course, guys, these options should be chosen in the sequence of their appearance, which means option 1 should be preferred, then option 2, then option 3, then option 4. You cannot say that, oh, option 1 is applicable to me, but I want to take option 3. No, you first have to take option 1. Then if that fails, then option 2. If that fails, then option 3. This is the sequence which you mandatorily have to follow while following the rules. Even 27, 28, 29, whatever rules we are going to do, this sequence has to be followed. Option number 3. Option number 3 is value of similar goods. So guys, if exact AC is not available, if the sale price of exact AC is not available, then there must be AC which is similar to the AC which you have supplied. Then similar AC's value can also be adopted. In this case, same AC's value was adopted. In option number 3, similar AC's value is to be adopted, which means a similar AC with similar power, similar make, similar cooling power, similar compressor, similar shape, that can be taken. It may be different slightly, little bit difference can be there, but similar goods shall be taken for computing the consideration of the value. What do you mean by similar? Similar means like kind in terms of characteristics, functions, and quantity. So like kind means similar kind. Like means similar. So we want a similar good. We want a similar supply, and similar in the sense of their characteristics. Characteristics, features should be similar. Functions should be similar, and quantity should be similar. Then we need to have similar quality. Quality should be similar. Quality, which means quality of the material which is used in making that particular good, that should be similar. Then reputation should also be similar. It should be similar. Reputation, which means sometimes we say that Samsung is a brand which is really nice. So if I'm finding a comparable company to Samsung, it has to be an equally good company. Just like Samsung is there, we need to have an equally good company, which means it should be equally reputed as Samsung is. So reputation should also be taken into consideration. That Samsung can be equated with, say, Mitsubishi. Mitsubishi ACs are important. Old generally ACs are good. Daikin ACs are good. So Samsung is to be compared with Daikin. It may be compared with Daikin. Samsung cannot be compared with any other cheap Chinese model. That should not be done. So the similarity of goods should be in respect of their kind, their quality, and reputation. All these things should be similar when you are qualifying your asset as similar good, when you are comparing the values. Okay, sir. करिश्मा says ऑप्शन 2 का कोई एग्जांपल दीजिए जहां बिजनेस ट्रांजैक्शन हो. सारे एग्जांपल सेल तो कस्टमर्स वाले आ रहे हैं और वो तो नहीं होना चाहिए ना. आई डोंट नो व्हाट इज करिश्मा सेइंग. करिश्मा, व्हाट आर यू सेइंग? I gave you the example. AC is being exchanged with old AC. Okay, I gave you the example. Same happens with B2B also. B2B transaction also, same things happen. I have a factory and I have a AC plant. I want to replace that AC plant. I will ask the vendor, you take my old AC plant and give me a new AC plant. In that, he will give me some concession in the new AC plant. That is what happens in the B2B transaction also. I've given an example of B2C, but is equally applicable for B2B transactions also. Yes. And finally, option number 4. Guys, this is the residuary option. These are the residuary rules. If no other rules can be applied due to whatever reasons, if no other rules are practically not possible for any other reason, guys, we will apply the residuary rule, which is rule number 30 and 31. This is the residuary rule. If nothing applies, then 30, 31 applies. Okay. So yes, this was consideration not only in money. If consideration is not only in money, it is in two different kind of considerations, then we will apply this particular rule. Now let's come on to rule number 28. Yes. So rule number 28 is when you are supplying the goods to a related party. What do you mean by related party, sir? Related party means there is some integral connection between the two parties and they are absolutely inclined with each other. They're absolutely connected with each other. This is known as related party. So what is the situation where the value is considered for a related party? Let's see. What is the rule for the valuation in case of related party when two related parties are transacting with each other? For example, a holding company is transacting with its subsidiary company. That is a related party transaction. Okay. What is the valuation rules for those transactions or those supplies which happen between two related parties? Two parties when they're connected with each other, what will be the valuation rule? Because guys, in this case, I've already told you, manipulation chances are high. There are high chances that to evade GST, the companies are going to manipulate the prices. Therefore, when the companies are, in a position to manipulate the prices, at that situation, guys, we are very, very cautious. Government of India is very, very cautious regarding the value of supply. So let's see what is the value of supply in this particular case. Yes, sir. Rule number 28. Rule number 28. Yes. All right. So rule number 28 says, again, we have options to value the goods according to rule number 28. So what are those options? One option is missing because that can be also manipulated. What is that option? Option 4 is भगवान सेक्शन. Yes, yes, yes. Option 4 is भगवान सेक्शन. जब और किसी के दरवाजे नहीं खुलते तो हम भगवान का आसरा लेते हैं. जब और सारे दरवाजे बंद हो जाते हैं तो भगवान हमें आसरा देता है. Very, very, very good. Okay, so now we come on to rule number 28, which is supply to a related party. And related party means that two parties are connected with each other. This includes the transaction between DDP, which is deemed distinct persons. So if a company has different branches in different states, it has to take registration in each of the state. Then that branches will be treated as deemed distinct person, will be different from the main head office of the company. This is the concept of deemed distinct persons. So yes, if you are transacting between related parties, or if you are transacting between two DDPs, which is deemed distinct person, then guys, in that case, we have rule number 28, which is applicable in our case. Rule number 28. Let's read what is rule number 28. Rule number 28 is option number 1, that you first of all take the open market value of the goods which are supplied. Again, option number 1 is that you are supplying the goods to some unrelated party also. If you are supplying the goods to some unrelated party, then guys, open market value will be the first thing. You must be supplying the same good to a related party also, right? So the first option is that you should choose the open market value of the goods which is supplied to unrelated party. That is the value of supply which should be taken by you. 3 conditions required to be satisfied: transaction between unrelated party, only money shall be the value of consideration, and the supply should be done at the same time. Around the same time the supply should be done. Option number 2 is the same value of similar goods. If exact good is not available, then guys, a similar good with similar characteristics, features, quality, quantity, reputation must be available in market. Okay, so you will take value of similar goods as option number 2 if you do not find same good which is being transacted between two unrelated parties. Benchmark is we need to see the value of similar goods which are being transacted between two unrelated parties. And option number 3, the Bhagwan option, rule number 30 and 31 can be taken as a benchmark for calculating the value. And yes, we will study 30 and 31 also in great detail. Now, guys, when you are dealing with a related party or a deemed distinct person, Act gives you a very good advantage. Acts give you a leeway for computation of value. It is by giving proviso number 2 and proviso number 3 to all of you. All right. What is proviso number 2? Proviso means exception or exception to the general rule which has been given by the section. That is proviso. So proviso 1 to section 28. in case of supply of goods. Proviso 1 is applicable only in case of supply of goods. Okay, what is Proviso 1? And this is at the option of the supplier, guys. At the option of the supplier, he may choose either these options, or he may choose the option which is given in the proviso. It is an option given to the supplier. Whichever is more beneficial to the supplier, he can opt and choose. Okay, this is very, very important point to be noted. Okay, at the option of the supplier, Proviso 1 says that if the goods are sold as it is, please note this word, as such, which means without any further modification, without any further changes, the goods is sold as it is to the recipient. When the goods is sold as such by the recipient further, so the thing is, supplier has sold the goods to the DDP, the related party, and the related party is further selling the goods as it is without making any change. So guys, I have a company which is located in Delhi, head office located in Delhi, factory located in Delhi, all the manufacturing products, manufacturing activities happening in Delhi. I manufacture goods and I supply it to my branch which is located in Chennai, and that branch further sells the goods to an unrelated party. Now the question is, when I am supplying the goods to Chennai, this will fall under the definition of supply and I have to pay GST on it. Okay, but the Chennai branch is my related party. It's a DDP, deemed distinct person. So the act says that if the goods are sold as such by the recipient, which means the Chennai branch sells the good as it is without making any modification, without making any changes, the goods are supplied as it is by the Chennai branch further to the customers which are unrelated customers, then guys, the previous transaction which is between me and the Chennai branch can be valued at 90% of the price charged by the recipient from its unrelated customer. So it is assumed that usually the people who are acting as a retailers who do not value add in the product and they are just acting as commission agents or retailers have a profit margin of 10%. So it is assumed that the recipient, which is the Chennai DDP in my case, if it is selling the goods at rupees 100, then I must have sold those goods to the Chennai branch at rupees 90. That is an implied assumption which is given in this particular section. Very, very important section, very, very important section. But the prime condition is goods should be sold as such. No modification in the goods, no change in the goods. The goods should be sold as such by the recipient to the customers. If that is the case, then the transaction between supplier and the recipient can be valued at 90% of the price charged by the recipient from its unrelated customers. Secondly, when the goods are not sold as such, which means goods are modified, some modification is done in the goods. Okay, if goods are modified and some manufacturing activity is done in the goods, guys, in that case we will apply rule number 28, which is value of open market of the same goods, similar goods. We'll apply this particular rule once again. So it depends, if you are further supplying it as such, then 90% of the price. If you're not supplying it as such, if you're changing it and then supplying it, then guys, rule 28 will be applicable in this particular case. So this is proviso number 1. Again, at the option of the supplier, this proviso is given, and very, very beneficial proviso for the suppliers. Yes, Zanab says it is applicable only for goods because goods can be as it is, but services cannot be supplied as it is. Perfect, perfect explanation. Very good. Now comes proviso number 2, which is applicable for supply of goods and supply of services both. Proviso number 2 is applicable on supply of services and supply of goods both. Both are covered under the definition of both are covered under the realms of proviso number 2, supply of goods and supply of services. Now, very, very important point which is to be noted over here, guys. Okay, if goods are supplied to a related party or a DDP, and the related party has taken full ITC on the goods, which means input tax rate has been taken entirely by the recipient, then the value which is declared in the invoice, that will be taken as the value of supply. Now, this is very, very strange and little complicated also. So I will take it very slowly because you'll be able to understand only when I'll take it very, very slowly. Suppose, guys, I am the supplier. I am the Delhi branch. I am the Delhi head office. I am supplying my goods to Chennai branch. Chennai branch is a DDP, deemed distinct person, but in the eyes of government of India under GST law, this is supply and I will be eligible for paying GST on the supply. I pay GST on the supply. My DDP will further supply the goods to a third person or a customer. When he will further supply the goods to a third person or a customer, he will again pay GST to Government of India, and he will take ITC of what I paid as GST to Government of India. My DDP in Chennai will take ITC of that particular amount. So if my DDP is taking full ITC, if my DDP is taking full ITC, then guys, the value of supply will be the value declared in the invoice. Whatever is declared in the invoice by me, government will not manipulate it. It will take as it is, whether it's overvalued or whether it is undervalued. Sir, we didn't understand the logic in this particular case. So I will explain this particular case with help of an example. Please understand this case with help of an example. Only then will you be able to understand what is the logic behind this particular case. So this is the example written in front of you. Okay. Example of proviso number 2. Example of proviso number 2. Okay. Please read this proviso very, very carefully. Okay. We have a supplier in Delhi. He has a branch in some other state like Mumbai. These are DDPs, so they are related party. Now, Mumbai supplier is delivering goods to the branch of its own. Goods are supplied from Delhi to the branch, and consideration is given from the branch to Delhi supplier. Now, the consideration is, of course, between related party. So, this consideration, which is 100 rupees, can be manipulated. Okay. So, as of now, let us take 100 as the value of supply. If 100 is the value of supply and GST is charged at 12%, then the invoice value will be 112. Guys, do not see the yellow, lemon yellow colored figures as of now. Only see the green colored figures as of now. Okay. 100 rupees value, GST 12%, 112 value. This amount will be charged from the branch of our supplier. Now, this branch is further having some additions done in this particular product. Some additions are worth rupees 50, which has been added in this particular product. And again, we will charge GST at the rate of 12%. The branch will charge GST at the rate of 12% and will further supply it to the unrelated customer. Further supply it to the unrelated customer. Now, 12% will be charged as GST. 12% again will be charged as GST. So I'm just calculating the amount of GST which is chargeable. 12% is the amount of GST. It is 18 rupees. So our branch will have to pay outward tax liability of 18 rupees. But before paying this 18 rupees, our branch will take an ITC of the amount which has been paid earlier. The amount which has been paid earlier is 12 rupees. So our branch will take ITC of this 12 rupees, and only 6 rupees incremental amount it is going to pay to Government of India. Only 6 rupees incremental amount branch is going to pay to Government of India. So supplier paid 12 rupees to Government of India as GST. Branch paid 6 rupees to Government of India as GST. Total GST which has been paid to Government of India is rupees 18 in this particular case. So far, so good. Any problems still here? Please ask in the chat box, because once I enter the concept, then it will be difficult for you to understand. If you're not able to understand whatever is happening right now, please do not see lemon yellow color figures. Only see the green colored figures. Is everything clear? Right? Yes. In the chat box. Is difference amount considered as discount? No doubt. Perfect. Okay, perfect. Great. Now, suppose this 100 rupees is manipulated because there's a close correlation between supplier and branch. This 100 rupees is manipulated amount. GST officer looks at this 100 rupees and he says, oh, this amount is undervalued. You should not have charged it at 100. You should have computed the value as 120. GST officer is saying, supplier, hey, Mr. Supplier from Delhi, why did you value your goods at rupees 100? They should have been valued at rupees 120. This is what is the comment of GST officer. GST officer is saying, hey, Mr. Supplier, you should have valued the goods at rupees 120. Mr. Supplier says, okay, let's take the figure at 120 and let's recompute our entire GST. So guys, if we take value as 120, which is the revised figure as per the GST law, then 12% will again be the GST rate. 12% is 14.4. So what is the total price of this particular entire product? It will be 134.4. It will be 134.4. That will be the price of this particular product. 134.4. Okay. Now, what is the GST which is paid in the interim? The GST which is paid in the interim by supplier is 14.4 rupees. Supplier is paying 14.4 rupees to GSTN. Supplier is paying 14.4 rupees to GSTN. When supplier is paying 14.4 rupees to GSTN, then guys, credit of this 14.4 rupees will be given to the branch of the supplier. Now let us come to the branch of the supplier. Guys, again, the branch of the supplier is transferring the goods to the customer at rupees 150. Now GST officer is saying, hey, look, branch. Hey, look, branch. This 150 is again undervalued. You should not have valued it at 150. I have overvalued this amount. I will also overvalue this 150 amount. I have overvalued the 100 amount. I will also overvalue this 150 amount. Hey, look, Mr. Branch, your amount is undervalued. I will overvalue the amount. These are the words of the GST officer. But then Branch says, dear Mr. GST officer, I am supplying to an unrelated party. And when the goods are being supplied to unrelated party, GST does not have any power to inflate my value of supply, because the transaction value or the amount actually paid is the value at which GST is leviable. So you have no right to inflate this amount. Yes, you could have inflated the amount which is given or exchanged between the two related parties, but you cannot inflate the amount which has been exchanged between two unrelated party. The assessing officer said, okay, you are right, I cannot inflate this amount. So 150 is taken as 150 as it is. When 150 is taken as 150 as it is, guys, we will add 12% as the GST in this case. 12% of GST is 18 rupees. Again, guys, branch has to pay 18 minus 14.4, which is 3.6. Ultimately, the GST which has reached the government of India is 14.4 from supplier and 3.6 from branch of the supplier. Same 18 rupees. So it hardly makes a difference. In case of unrelated party, if the unrelated party is taking full credit, if recipient is taking full credit of ITC, doesn't make a difference, doesn't make any difference what is the inflation in the value which is taken by the government of India. So government of India is saying, why should we enter into this critical exercise of inflating your value? We will not inflate your value at all. We will not inflate your price at all. You take whatever you have taken in your invoice, whatever we have taken in invoice. What have we taken in invoice? 100 plus 12. Take it as it is. There's no loss to revenue. Even if you inflate the price or deflate the price, there's no loss to the revenue. Take the price as it is. We don't have any problem. So in case of unrelated party, please understand proviso number 2 now. I am repeating proviso number 2. Please understand proviso number 2 now. Okay. सर का फेवरेट कलर है लेमन येलो एंड मेजेंटा. कुछ भी मतलब कुछ भी रैंडम है ना, बीच में कुछ भी हुआ तो नेट इंपैक्ट लास्ट में कितना जा रहा है गवर्नमेंट में वो मैटर करता है. वेरी गुड. इट्स नॉट प्रैक्टिकली पॉसिबल एक्सेप्टेड. किसी ने क्योंकि हमें कॉल करके नहीं कहा कि और पैसे दो, दाम बढ़ गया है. यस, एब्सोल्युटली एब्सोल्युटली. अनरिलेटेड पार्टी के केस में वैसे भी कोई कोरिलेशन नहीं है भाई. ठीक है. सो व्हाट डज रूल से? प्रोवाइजो 2 सेज दैट when full ITC is taken by recipient, when recipient is taking the full ITC, and in other case where recipient is not taking the full ITC, when recipient is taking the full ITC is being taken by the recipient, value of supply is declared in the invoice. Value of supply will be the value which is declared in the invoice. We will not change that value, be it undervalued or be it overvalued. GST council is not getting any problems in it. And in other cases where the full ITC is not taken by the recipient, in that case we refer back to rule number 18 in that particular case. So I hope this is a difficult proviso, guys. This is a difficult proviso. Even proviso number 1 is a difficult proviso. This is also a difficult proviso. If you are able to understand this proviso, then please write yes in the chat box. Please write yes in the chat box if you've been able to understand proviso number 2. Very, very important. And yes, complicated also. You need not mug it up, but you have to understand it. You need not mug it up, but you have to understand each and every component of this proviso. Yes, sir. We are going to understand each and every part of this proviso. Please write yes in the chat box. All right. Let's move on. Yes. Superb. Oh, guys, I'm feeling so tired. I need some energy from all of you. Look, now energy is depleting, and my energy is depleting, and I'm going down. My energy is depleting. I want all of you to recharge my energy. Only then will I be able to cope up with the rest of the class. Otherwise, I won't be able to cope up with the rest of the class. I want some glucon D from all of you. Please send me glucon D in the chat box. And yes, I can realize that glucon D is being sent by you. Yes, you are sending glucon D in the chat box. Yes, you are giving me thumbs up in the chat box. And this thumbs up means that I am energetic now. Back with the bang for continuing with the class. Firoz Ansari is giving me some bad drinks. No, I don't have these bad drinks. Kirti Batra is giving me pizzas and French fries. Kirti Batra is also giving me thumbs up. Very, very good. I need the thumbs up. Yes, guys. Yes. Fantastic. Thank you so much for your encouragement. And I really don't know how do you put these smileys on, because I've never been able to put these smileys on the chat box. How are the... I don't know. Okay, all right, guys. Let's move on to the next rule. Next rule, very, very important rule. Rule number 29. Rule number 29, very, very important rule of your syllabus. In case of agents, how are you going to value the supply? Because as agents are the people who, on our behalf, they are selling products on our behalf. So they're almost like our people. So they are our own, image, our own shadow. Chocolates. Yes. Yes, Imani Chauhan. जल पी लीजिए, थक गए होंगे. जल. साहिल लुथराज बिल्कुल प्योर हिंदी यूज कर रहा है. जल पी लीजिए. लगता है साहिल लुथराज कोई पुरानी हिंदी मूवी देख के आया, इसमें ऐसे कहते थे ना, कोई प्योर हिंदी में वर्ड्स कहते थे. चलो, let's start section number 29. Section 29 is the supply which is made from an agent, distributor, or a concessionaire. Now, first of all, who is an agent, distributor, or concessionaire? He is a person who, for a fees or for a commission, he supplies goods for us. He transfers goods for us for a commission, for a small amount, for a referral fee. He supplies goods on behalf. He sells goods on our behalf, and he takes commission from us. He is the agent. Agents are two types. Sole agent. Sole agent means an agent who's working only for one principal. He's the sole agent. And there are independent agents which are working for more than one principals. They have many principals in their kitty. They are known as independent agents. In case of sole agents means people who are only dependent on one agent. Guys, in that case, they are treated as deemed related people. They are treated as deemed related person, and section 28, which we have just discussed, that is applicable on those people who are sole agents. But if they are independent agents, which means they are dealing with multiple principals at a time, in that case, rule 29 will be applicable, which we are going to study now. So yes, we are now going to start the concept of independent agent, section 29. Dependent agent like you are of MBVA. CMA नहीं निकला तो साई विवाह करेगा. करिश्मा, ये थोड़ा सा ज्यादा हो गया, पता नहीं क्या करिश्मा बोल रही है. अच्छा, विवाह मूवी आई थी एक, जिसमें प्योर हिंदी में बोला जाता था कुछ चीजें. साई आज वही कर रहा है, प्योर हिंदी यूज कर रहा है. जल पी लीजिए. Now I get the joke. All right, let's start. Rule number 29, supply to or from an agent. An agent has to be independent agent. This rule is not applicable on dependent agents. Dependent agents means agents who have only one principal. This rule is not applicable on those agents. For dependent agents, we have rule number 28. Now, guys, when goods are being transferred to an agent or they are being received from an agent, in that case, guys, the first option is to value the goods on the basis of open market value of the goods supplied to unrelated parties. First option is, let's see if same goods are available in market. If those goods are available in market, then guys, the value of those goods will be taken as the price of our goods which we are dealing with in our agents. Because guys, sometimes now agents also, since there are agents and they are integral part of our existence, integral part of our community. Therefore, we tend to manipulate value with them also. So Government of India is saying nothing doing. If you have open market value of the goods which are supplied, same goods which are supplied in market, if you have the open market value of those goods, then you take that value as the value of supply. The three conditions remain same. Okay. Or at the option of the supplier, there's an option of the supplier. Okay. You can take 90% of price charged by the agent from its unrelated customer. Obviously, what is the agent going to do with these goods? It is further going to supply these goods to the customers. So you can take 90% of price charged by agent from its customer. You can take that 90% of the price as the price of your goods which are transferred to the agents. We have already studied the proviso in the earlier rule. It is very similar to the proviso which is there in the earlier rule. Now, if both the options are not possible, then we go to the Bhagwan rule. The Bhagwan rule is rule 3031. This is the Bhagwan rule. If no other rules work, then we go to 30 or 31 rule. Okay. So this is an easy one. Supply to and from an agent. An agent means an independent agent. Okay, sir. Got it. And finally, the Bhagwan rule. The two rules which are the residuary rules. If no other rules are acceptable or workable, we go to rule number 30 or rule number 31. What is rule number 30? Rule number 30 is, in case of goods, we can calculate the value of supply as 110% of cost of production, cost of manufacture, cost of acquisition. And this cost will be determined as per the cost accounting standard 4, which has been prescribed by the CMA Institute. And in case of services, we will calculate the value of services using formula 110% of cost of provision of services. It will be 110% of cost of provision of services. At what price the cost at which the services are provided, that cost plus a reasonable markup, which is 10%, 110% of cost of provision of services. This will be the rule number 30. And what is the rule number 31? 31 rule means any other reasonable basis. You can take any other reasonable basis, but of course it has to be consistent with the principles of section 15. Section 15 principles should not be flouted in case you are taking any other reasonable basis. And guys, this is very, very subjective, because the assessing officer is definitely going to challenge your basis of supply. But there's no other alternative, guys. If every other alternative fails, then reasonable basis becomes the sole alternative. So there's no other alternative in this particular case. ICMI recognize तो हुआ है IDT में, बिल्कुल ICMI is recognized in IDT for sure. In fact, जो पहले indirect tax के जो sections हुआ करते थे before GST, like sales tax, okay, उसके अंदर तो बहुत बड़े form में income tax CMA Institute was being referred to, because the cost accounting standard 4, it definitely boils down to how the computation is made according to the CMA Institute. So yes, it's very, very important. Okay. Now let's study rule number 31A. Guys, after rule number 30, there are certain miscellaneous rules that we will refer to while calculating the value of supply for certain peculiar goods. So rule number 31A onwards refers to some peculiar goods which, while we are supplying, we will value the value of supply using those rules. They are peculiar goods. They are specific goods which are to be valued according to the values which are given in rule 31A. What are those rules and what are the section provisions connected to those rules and to those products? We are going to start now. So 31A2, supply of lottery. Guys, in case of lottery, generally Government of India supplies lottery to the distributors, and distributors sells the lottery in general market. In case of lottery, the value of supply will be higher of face value of lottery multiply by 100, divide by 128. So 20% is the GST rate. So whatever is the face value of lottery, that will be treated as the value of lottery, or the notified value of lottery. Notification means in official gazette, guys, this value is always notified and its value is written in the official gazette. So whatever is the notified value of lottery or the face value of lottery, whichever is higher, we will divide it by 128, because we'll include that, we'll include the GST amount in the value. 20% is the GST amount, we'll include it. So divide by 128 and multiply by 100 will give us a value of that particular lottery. So value of lottery means, the face value or the notified value, whichever is higher. That is the, value of supply. So higher of face value of lottery or notified value of lottery, multiply by 100, divide by 128 is the formula of value of supply. Now, in case of betting, gambling, horse race, which is section 31A3, in this particular case, guys, the value of supply will be the face value, the value at which the betting is made, the value at which the gambling is done. All those will be treated as the value of supply. So it will be directly the face value, and we'll multiply whatever GST rate is applicable on this face value. That is the rule. Okay. Okay. Now rule 32. Rule 32 deals with some miscellaneous kinds of goods and services which are there. I'll be discussing the major ones with all of you. Okay. Some miscellaneous rules are there in rule 32. Okay. First one. Very, very, very important. Please mark, very, very important in this particular supply, guys. Very, very important. It refers to the commission which the commission agent charges on sale and purchase of foreign currency. So guys, whenever you are going abroad, you need foreign currency for spending in outside the country. For example, if I'm going to US, I need US dollars. Okay. So what I'll do is I will give Indian rupees to the broker, and he will give me US dollars. And of course, while giving me US dollars, he has some commission which is added to it. So that commission, will be valued according to the rules which are given over here. That commission on purchase and sale of foreign currency, that commission will be valued according to the rules given under this particular rule 32.2. So now let us start. How will we value that commission element of the foreign currency? That commission element is very, very, very important. So purchase and sale of foreign currency and the commission which is given there too is the subject matter of this valuation. Rule number 32.2. Let's start. Okay. So now there are two scenarios which are there in case of foreign currency conversion. Two scenarios are: one of the currencies exchanged in INR, or both the currencies are exchanged in INR. None of the currencies exchanged in INR. So if one of the currencies exchanged in INR, which means that, I want USD, okay, and while I buy USD, I give INR to RBI, or I give INR to the middleman or the person who's the broker. I'm giving INR and I'm receiving USD. Okay. In that case, one of the currencies exchanged is INR. One of the currency which is exchanged in INR. So I'm giving INR and receiving USD. So one of the currency exchanges INR. Yes, I'm giving INR. Okay. In that case, the valuation rule is, if RBI reference rate is available, RBI reference rate is there for that particular currency valuation, then the buying or the selling rate minus the RBI rate. So RBI is supplying the US dollars to the broker at say rupees 78. Broker added 0.5 in that particular value and sold me the USD at 78.5. So what is the commission? Commission is 0.5. How will it be calculated? Buying or selling rate minus the RBI rate. So value of supply will be buying and selling rate, or the RBI rate. That will be the value of supply. That is the commission which is charged by the middleman or the broker. So in case RBI reference rate is available, then we compute the value of supply using this particular formula. Now suppose value of supply is not eligible. So Anjali is asking, sir, why are you taking 128? When 28 is the percentage. So when 28 is the percentage, if I have total value, say the total value of the lottery is say 100 rupees. Okay. Now 100 rupees is inclusive of GST of 28%. So I'll divide 100 by 128 and multiply it by 100 to compute the value exclusive of GST. 100 rupees is inclusive of GST. So I'm dividing by 128 and multiplying by 100 to get the value exclusive of GST. That is why I'm dividing by 128, because 100 is inclusive of GST. 100 amount is inclusive of GST amount. That is why I'm dividing by 128. This is the answer to Anjali's question. And please ignore Sai Luthra's and Zainab's comment, because they are talking about some cheap destinations. Okay. So now case number 2, when RBI reference rate is not there. Guys, there are many countries in the world where RBI does not have any trade relationships, and therefore RBI does not have any exchange rate with those countries. In this case, the middlemen or the brokers, they directly purchase the foreign currency from outside India and they sell it to us. Okay. In that case, RBI reference rate is not there. So if RBI reference rate is not there, then the value of supply will be 1% of the INR provided or received by the consultant. We don't know what the RBI rate is. Whatever consultant is charging us, we are just believing that particular rate. In that case, whatever the consultant has charged us, 1% of that amount will be treated as the commission, or will be treated as the amount which is to be remitted to the agent. So that is the case where RBI reference rate is not there. So countries where RBI is not having any reference rate, in that case, consultants are fetching us the foreign currency directly from those countries. In that case, guys, we have no other option but to take 1% of the INR provided or received by us. That is the value of supply. Now, coming on to the next case where none of the currency exchange is INR. So no currency exchange is INR. I'll give you an example. So, I come back from Thailand. I have a very good vacation in Thailand, 1 week's vacation, which I have done in Thailand. I come back and I have Thai baht with me. Now I'm going to US. Okay. So I tell my agent, look, agent, I have some Thai baht. Please take this Thai baht and give me USD. So none of the currencies which I exchanged are in foreign currency. None of the currency exchange is INR. Both of them are foreign currencies. So one foreign currency is being exchanged for another foreign currency. This is the scenario in this particular case. Now in this case, guys, there is no RBI rate which is being exchanged over here. Okay. Both the currencies are foreign currency. So USD is being converted to Thai baht. Okay. If US is converted to Thai baht, then foreign exchange is converted to foreign exchange. In that case, the commission amount will be 1% of lesser of currency one converted into INR or currency two converted into INR. Whichever currency has the lower in exchange rate, that will be the value of the 1% of that value will be taken as the commission. 1% of that value will be taken as the commission. 1% of lesser of currency 1 converted into INR and currency 2 converted into INR, that will be the value of commission. And on this 1%, you will apply GST. Okay, you will apply GST. Why do you always think that Thailand is always a cheap destination, or is it that you do some bad stuff in Thailand? No. Thailand is for relaxation, for meditation, for yoga. It has got so many beaches, beautiful beaches. You do yoga over there, you do meditation over there, you do some mind calming exercises over there. This is what Thailand is all about. And you are saying some rubbish things about Thailand. Very bad, very, very bad. Okay, now comes the Proviso to rule number 32.2. Proviso to rule number 32.2. Now, guys, in this situation where the commission is apparently to be disclosed on the invoice, some foreign exchange converters or the agents are not happy. They don't want to disclose the amount of commission which they have charged in the invoice. But by doing this, their entire commission comes into forefront. Their entire commission which they have charged is on the papers, on the invoice, and they don't want the users to know what is the commission that they have charged. In case the RBI, the middlemen don't want to disclose the commission which they have charged from the consumer, then they can opt for Proviso to rule number 32.2. They can charge GST on a commission which is a standard commission which is provided under law. If they charge commission on the standard commission which is provided under law, then they will not have to disclose the actual commission which they have charged from the person who is selling or purchasing the foreign currency. So what is the commission that they can charge GST on? Up to rupees 1 lakh exchange. If you have exchange the INR, the foreign currency up to rupees 1 lakh, then 1% or 250, whichever is higher. So minimum is 250. They have to mandatorily charge 250 as commission, or 1% of the amount which is exchange. Both of them, whichever is higher, is the amount of commission, and you can easily pay the GST on this particular amount. You need to not disclose the actual percentage of commission which is charged by you. Case number 2, when you are selling goods, foreign exchange worth from 1 lakh rupees to 10 lakh rupees. So 1 lakh rupees or 10 lakh rupees is exchange. Foreign exchange is exchange up to 10 lakh rupees from 1 lakh rupees. In that case, rupees 1000 plus 0.5% of the transaction. That should be the commission value, and GST should be charged on this particular commission value. Guys, the idea is that on the invoice, we don't want to disclose the actual commission which is being charged from the users. Okay, that is the idea. Nalayak. Sai Luthra, I will answer all your questions on phone now. Okay, I will call you and I will answer all your questions. Now you are getting really, really below the belt. Okay, above 10 lakh rupees. So if you purchase foreign currency above 10 lakh rupees, then guys, in that case, the commission which should be charged by you is rupees 5,500 plus 0.1% of the amount which is exchange. In that particular case, your commission should be calculated in this manner, and the GST should be levied on the commission which is calculated in this manner. So this is an option which is given to the travel agents, to the people who are selling foreign currency, so that they need not disclose the amount of commission which they have charged from a particular user in the invoice. This is a method to compute the commission and charge GST without disclosing the amount of commission which has been charged by them to the users, because they generally want to hide this information. They generally want to hide this particular amount of commission. Okay, sir, got it. Let's move on to the next service, guys. Yes, air travel booking. If you are an agent and you are into air travel booking, which means you are into flight booking, then the amount of GST, the value of supply which is to be computed is domestic booking 5% of the basic fare, and in case of international booking 10% of the basic fare is the value of supply. Basically, you are providing service of international booking, air travel booking. 5% in case of domestic, international 10% of the basic fare should be the amount of commission, which is amount of value of supply, which is the commission which is charged by you. That should be the value of supply. So guys, in this case, government has given you the commission amount. Okay, government has given you the value of supply. Now you can charge higher amount, you can charge lower amount, but GST will be levied on these amounts only which are given over here. We come on to the second hand goods. Second hand goods means goods which are sold after being used by someone else. Okay, so one businessman has purchased a plant machinery, it sells to another businessman after using it. So it's the sale of second hand goods. Of course, ITC would have been taken by the old businessman, by businessman one who purchased the goods earlier. ITC would have been taken by that particular businessman. Yes, absolutely. One very important point, guys. The emphasis is on basic fare. So only basic fare is eligible for computation of value of supply. Any add-ons to the basic fare will not be eligible for value of supply. That is an important thing. Okay. Now coming on to the second-hand goods, person who's selling second-hand goods to another person, purchased from the seller. If the second-hand goods is purchased from any seller and ITC is not taken by the seller, if seller has already taken the ITC, then guys, this rule is not applicable. Okay. So if the seller has not taken ITC, ITC has not been taken by the purchaser, and the goods are being sold to some other person on which are second hand goods, then the selling price minus the purchase price will be the value of supply. Value of supply will be the selling price minus the purchase price. This will be the value of supply, and GST will be charged on this particular amount, which is selling price minus the purchase price. Okay. Then if the goods are repossessed from a defaulting buyer, this happens all the time when you have taken loan from the government of from the ICICI Bank or any of the financial institution. Then they can come to your home and can take your fixed asset away if you have not repaid the loan EMI. So in that case, guys, the value of supply will be selling price minus the purchase price of this particular good. Now please note that purchase price is to be calculated using this formula, which is the original price of that particular good minus 5% per quarter depreciation will be charged. 5% per quarter depreciation will be charged, and then the purchase price will be calculated. Okay, very, very important provision from an exam standpoint also. A case where the second hand goods are sold, or second hand goods are acquired by the defaulting person. Oh, very, very important, guys. Life insurance. Very, very important. Life insurance business. So if you are into life insurance business and you are providing life insurance to the subscribers, then what is the value of supply in that case? Important part. Okay. Now, life insurance business. Now, please note that this particular section is only applicable to life insurance where risk and savings policy both are there in one policy. This section or this rule is applicable only in a case where life insurance is given and both the elements are there, risk coverage is also there, and savings is also there in a particular policy. Only then this particular rule is applicable. If you have a policy which is 100% risk policy, this rule is not applicable. Or if you have a policy which does not have savings policy, this rule is not applicable. Also, this rule is not applicable on general insurance, which means other than life insurance, if general insurance is there, this rule is again not not applicable on general insurance. This rule is only applicable where your insurance policy has risk element to it and it also has savings element to it. Both the elements are there in your insurance policy. Now, let us see. In case of savings policy, investment amount is intimated. What is the amount of investment and what is the amount of insurance that is intimated in the policy itself? Then the value of supply will be gross premium minus the amount allocated for investment. So the pure insurance the pure insurance value will be the value of supply in this case. So it will be gross premium which is being charged by you minus the amount which is allocated for investment. That will be the value of supply in case this is a savings policy and a policy which has risk cover as well. Okay. Investment amount not intimated. When investment amount, what is the amount of investment from this insurance policy? It is not intimated to you. Then guys, we will assume what is the insurance amount. We will assume that in case of first year, the value of supply of insurance will be 25% of the premium. And in case of subsequent years, the value of supply will be 12.5% of the premium. This is an assumption that we will do if the percentage of insurance versus savings is not given to us. कभी हमें भी पेट्रोल दे दिया करो, हम भी थकते हैं. अरे नालायक, तुम अपने घर में बैठे हो आराम से एसी खोल के और तुम चिप्स खा रहे हो, तुम बर्गर खा रहे हो, तुम कुरकुरे खा रहे हो, तुम चॉकलेट खा रहे हो, तुम इतनी सारी चीजें खा रहे हो आराम से बैठ के. तुम्हें क्या बात की थकान हो रही है नालायक? Oh wow, brilliant. Every student who's watching this live session or the recorded session is going to get 80 plus in DTIT for sure, guys. 80 plus DTIT you are going to get for sure. So whenever there's a single premium annuity policy, a policy which will have a single premium and it will give you returns for an annual basis for a longer period of time, whenever there's a single premium annuity policy, in that case value of supply will be 10% of the single premium which is there. It will be assumed that the insurance element of this policy will be 10% of the single premium. That is an assumption. That is a calculation of VOS which is given in this particular case. Okay, sir, got it. Let's move on to vouchers. Very, very, very important. Please mark very, very, very important in case of vouchers. In case of vouchers. Okay, so vouchers means, there are gift vouchers which are given by the company to its employees, or it is given by, the shop owners to the company. So, we have companies who buy vouchers from the shopper's stop or malls and they give it to their employees. Okay. Now, when you purchase the vouchers from the mall, at that point in time, if the product which you are going to purchase from that voucher is ascertained, which means that we are only going to give some pens to our employees, and it is known that only Schaeffer pen will be given to our employees. In that case, the GST will be levied at the time when the goods are ascertained. So GST value of supply will be the value of that good, the value of the voucher which is there. So 10,000 rupees voucher, 10,000 is the value of supply. And the rate will be the rate of the pen which is being given to the employee. Maybe the employee will take that pen after 2 months or 3 months, it's okay. But we will have the value ascertained on the date when the voucher is being supplied to the company. Voucher supplied to the company, we will pay GST on that amount. That will be the value of supply as on date when the voucher is supplied to the company. However, in case where voucher is an open-ended voucher, which means the employee can roam about in the entire mall and can buy anything, can buy clothes, can buy food items, can buy pen, can buy stationery, can buy bag, anything he can buy. So we don't know what is the GST rate. In that case, the value of supply will be fixed when the voucher will be redeemed by the employee. That is the simple principle of voucher. So voucher value of supply will be ascertained if the voucher is ascertained voucher, then at the time of sale, and the value of supply will be the value of the voucher. And if at the time of redemption, if we don't know what the employee is going to purchase, then at the time of redemption, we are going to ascertain the value of supply. Pure agents, important section again. Rule 33, pure agents means the agents which are acting only on behalf of a particular principal, and they are not holding the title to the goods. They are just in a role of letting the buyer and the supplier meet each other. That's it. They are not holding title of the goods, neither are they using the goods for their own purpose. They are directly getting to meet two people who are independent people. They are known as pure agents. Now, supply as a service provider. If the pure agents supply the goods as a service provider, they providing a service that which is that they're going to let both the parties meet. In that case, it is included in the VOS, value of supply is added, amount of the commission is added to value of supply. In case they are supplying it as a pure agent, they are just supplying the goods as a pure agent, which means they don't hold title. They are just getting the goods and supplying it to the recipient. In that case, it is, if it is indicated separately in the invoice plus actual amount is charged, then it is excluded from VOS. We won't include in VOS if it was indicated separately and actual amount is charged. And in any other case, it is included in VOS, value of supply. That is when the supplier is acting as the pure agent. Supplier is only acting as a pure agent, then this principle is applicable. Okay. So pure agent, yes, sir. Expenditure of foreign currency. Okay, perfect. So guys, this is what we have concluded for the value of supply. This is what we have concluded for value of supply. And guys, in this case, value of supply, we have finished almost all the rules, all the sections have been completed by us. Now it's your responsibility to again read it and do the practical questions also of this value of supply, because it is definitely an important topic of your syllabus. Tomorrow we are going to start time of supply, which is again an important topic of our syllabus. And yes, we are going to start the new chapter as well tomorrow, because time of supply is relatively shorter as compared to value of supply. But let's see what we are going to do tomorrow. So yes, we'll be going to continue this session of marathon series tomorrow. And yes, guys, do hit the like button which is there on your screen. And yes, join me tomorrow for the live session again. And yes, we are going to complete GST in a very, very short span of time. We are going to complete entire GST absolutely superbly, fantastically. And yes, listen to these marathons in using your earphones while you are traveling, while you are having some free time. Always listen to these marathons. The rules will be embarked in your mind, the rules will be printed in your mind, and in the examination there'll be your sections and rules will also, numbers will also be reminded to you, and you will make a lasting impression on the examiner, on the checker. On that positive note, we'll be meeting tomorrow. All the very best and happy studying. Bye bye. See you in the next session.